Hey folks, Dan Frio here, the rate update, where our job and goal is to educate you guys everything real estate, especially when it comes to the financing piece of the puzzle. So as you can see behind me, we got blank walls. We're going to have some paint done, some decorations done, some lighting put in. So probably within a week or two, you're going to come back and say, whoa, that looks pretty cool. So the goal, what we do here is I try to explain to you guys what economic news came out or is coming out today or in the next couple days or the next week, and how that should roll over and what effect should it be with mortgage rates. Well, the only thing we have today is the employment numbers. So let's get over to that area and let's see how this might correlate to any changes in mortgage rates. So we go over to the main news that we go to, and it's CNBC this time, and we're seeing that the news today is payroll growth accelerated by 428,000 in April, more than expected as job pictures stay strong. That's great news. What other news is out there? So what we do is we go to the economic calendar and we figure out, okay, what news that's coming out should make any changes to the bonds and stocks and a whole bunch of other stuff. So we go here. The only news out on Friday, May 6th is non-farm payrolls and the unemployment rate. So you can see right here, last month we came in at 428,000 new jobs were created. The expectations were for 391. They missed it because it came in at 428 on the button, just as we were last month. The unemployment rate was unchanged from last month of 3.6 to 3.6. That's all the economic news that came out today. So what I'm trying to do is make this a little speedier. So you guys are here. Why? What's going on with mortgage rates? But the number one question I get on a daily basis is, Dan, what do you expect rates to be this summer, this fall, by the end of the year? So that's why I monitor this on a daily basis. And I share that news with you guys so you can inform yourself. And if you're a realtor, your clients. If you're a mortgage advisor, your clients. If you're following me, you're hopefully my client. So let's get over to how that is affecting mortgage rates for the day. So what do we do and why do we do what we do? So what I do is I follow the yield on where mortgage rates are coming from. Okay, so how do mortgage yields or mortgage rates get calculated? Well, the biggest component is the yield that you're going to see right here. Well, this is actually the price, but the yield on a bond. That bond is a mortgage bond. It's a mortgage-backed security bond that trades on Wall Street. Okay, this is basically what's going on with it. All I want you to know is this number here. Okay, this number represents what's taking place on that bond for the price. So what's the price of the bond doing? This is telling us it's down 8 cents from where we were. Okay, and this will change tick by tick by tick. Let me refresh my screen and see if it's moved at all. It's now at 9. Okay, so what happens with this is as the bond price goes down, any bond, if the price goes down on a bond, the yield goes up. So in this case, because it's a mortgage bond, when this mortgage price or this mortgage-backed security price, mortgage bond, goes down, the rate, the yield, the mortgage rate goes up. Okay, we can see basically from October to now, we've had nothing but down, down, down. That's why you're seeing mortgage rates spiking and mortgage rates going up. So we follow what the yield is on the mortgage-backed security to figure out where mortgage rates are going. And this is all tied to economic news and the Fed. Okay, so that's why we monitor what we monitor on a daily basis. So we know that the mortgage-backed security price is down. So what's going to happen with rates? They're going to go up. So now we go over to the mortgage rates. These are mortgage rates published by Mortgage News Daily on a daily basis. They keep them updated, but what you have to understand, this is a national average. They survey mortgage lenders all over the country to get what their rate is, and then they blend these things to what the averages would be. Okay, so this specifically isn't a specific rate for any particular loan. It's an average from all the lenders throughout the country. So you might see this and say, well, my rate's 6. Well, there's probably a reason for that. But let's go through where rates are, and then I'm going to explain some more things to you. So we start here and we see the 30-year fixed rate started the day at 5.62. It's up an eighth. It's up 0.12. Okay, that's what this means. So we knew the bond price was going down, so the rate, your mortgage rate would be going up. And that's what's happening. Okay, so the 30-year fixed right now is 5.62 national average, and it's coming in with a fee of 0.4 in points. This is basically, if this was 100 points or 101, it would be 1%. So think of the word point as percent. So this would be 0.4%. So how do you figure this? So let's take your loan amount. Let's say the loan amount, to make it simple, is 100,000. You got 100,000 loan amount. We multiply it by 0.4%. Make sure you hit 0.4, then the percent sign, then equal. That's how much it would cost you to get this rate. So let's go across the board and explain the rest of these. The 15-year isn't up much. It's only up 0.02, coming in at 4.9, comes in with that cost. The 30-year FHA, and I'm going to lump in, the Mortgage News Daily doesn't have all the government-sponsored loans, which are FHA, VA, and USDA, but I'm going to lump those in here because basically I just want to give you a guideline, and we follow here on a daily basis is the trend, okay? So the government programs are coming in at 5.19 right now, up 7 basis points, 0.07, which you're going to see right here. Then we have the 30-year jumbo. It's coming in at 4.75. It is up 0.04 from yesterday. We referenced that 4 basis points. And then we go into the ARMs coming in at 4.69. It is up 4 basis points from yesterday as well. Down over here, you're going to see the 10-year chart. And we are in uncharted territories right here with rates or yields higher than we've been in a long time. All right, so that's what we see in here. Then we go over to this section here, and this is giving us the trend for the day. Well, the only economic news out for today is the employment numbers, and we've already seen those, and those came in okay. So basically, we're almost in a neutral zone right here for the trend for the day. So I like that because for the past, as you can see over here, for the past 4 or 5 months, it's been just consistently down. And again, this is the mortgage-backed security chart. When the price goes down, the yield or mortgage rates go up. So that's explaining that right now. So if you're looking for a mortgage or mortgage advice, please check us out. You can go to therateupdate.com. This is where it'll take you. There's many ways to get a hold of us. You can give us a call at 844-775-5626. That is right up here. You can apply online. You can even book a meeting. This will open up a calendar that we have available, showing the days and times that you can choose from, and then we'll be in touch with you via Zoom or phone call. Or you can go down here to this nifty little chat button, and you can chat with one of my loan officers that's always online. Other than that, thank you so much for watching. God bless. Have a great day. I'll see you guys Monday. Bye-bye.